and officially. Welcome out, everyone, to the Market Watch Group Weekly Market Prep. I am Scott. I will be your host. Super excited, as always. Everybody knows that Sundays are my most favorite of days. The chimp is asleep. The professor's at the computer. Here we are, ready. We've decompressed. We've had 2 days, basically. 2 good nights sleep since Risk. We're in a perfect mindset to prepare for the week. That's why I love Sundays. Let me keep going on my slides. As always, remember, we're not brokers. We're not advisors. We don't give guidance. We don't give recommendations. Our service is for education, illustrative purposes, collaborative group, all improving our trading together. The agenda, obviously, market posture. We thought it would drop. What did I say? I thought it could drop like up to 3/4 of a point, maybe more. I thought we would end up low 4s, maybe high 3s. Just spitballing it, which is actually very similar to what happened in the market that we saw. I forget my reference point, March or April, this last time. And this last time, if you guys remember, I was very keyed into the August, September, October, where it's like, okay, at the time we were processing the fact that the market wasn't getting what it wanted from the Fed, right? And that's what had that little bit of a dip, was just kind of building that in. Okay. We'll be able to evaluate and check what our posture did then versus what the price did, what's going on now, and then we'll take a peek back at that August, September, October timeframe, because if it gets worse, you want to know what that's going to look like and how you're going to be ready to trade it. Economic calendar, it's Fed week, right? So we've got the Fed announcing on Wednesday, no expectation of any changes policy-wise, but we're always going to be paying very close attention to the verbiage that the Fed is using as an indication of the probability. Are we definitely getting this? The market is at a definite right now, and it's a funny thing because I still don't find myself there. With this election heating up, with the GDP number coming in at a 2.8, right? Again, all of a sudden, for the last 2 weeks, I want you to notice there hasn't been as much talk of like the weakness in the labor market. Like, I just remember, like, what weakness are they talking about? There was that one indicator that all of a sudden became way more pervasive. It's that reference of the unemployment having moved 50 basis points higher than its 12-month low. Well, its 12-month low is also its historic low. And that has to change the context. And in fact, the economists who coined and pioneered this concept, Sahm, S-A-H-M, Dr. Sahm, I would assume, she came out and raised her own concerns of it because of the fact that the reference point for this, are we 50 basis points off of the 12-month low, is also the lowest it has ever been. Okay. Sectors. So I want to point out that we had seen the stall in technology and communication services, which led us to do some searching where industrials and financials and consumer. And now all of a sudden, that's where the money is. That's why money flow is so important. That's why sector rotation is so important to us, right? Watch list maintenance. This is where if things start breaking too hard on technology and communication services, we will consider bouncing them. Some things are fixtures. I'm always going to watch Apple. I'm always going to watch Google. I'm always going to watch Facebook. Right? Always. There are stocks that I'm always going to watch. And then there's those that I'm going to add when the momentum pops them into my purview through our search mechanism. If you don't have a good search, remember that we have one pre-built for you in your trade in the trading resources. You'll find a pre-built FinViz search. All you have to do is click it, and it'll run the search all the way to the point where all you have to do is pick the sector, and then run the sectors, and then run that sector one industry group at a time. Pick the best one. You'll be amazed at the quality of watch list you just built so fast. Okay, we're going to have a list, an opportunity list. There's that shopping word again. I swear I corrected them all. And we'll look at the trading plan. We're working on analytics. If you're new, it's a hard place to come in. So one of the things we do if you're new, every week we pick a section of the trading plan to work on. So we pick a section of the trading plan, and that what I say is if you give me just 3 sessions, 20 to 30 minutes per session, dedicated completely to your trading plan, where that's all you focus on is thinking about, editing, considering, whatever it is, making your trading plan better, one section at a time. There's 8 core sections. Now, we've been doing that for a while now. So some people who've been with us for a while started to find themselves understandably getting bored with that routine. So then we went through a trading plan prioritization process. How do you evaluate your trading plan and then identify which sections? It actually seems like something we should do. I think we're going to do that again soon. That just sparked my mind for a foundations. Our trading foundations workshops, Tuesdays and Thursdays. It's a workshop. That's what we do. So we're going to do that again soon if you haven't done that for a while. So you're going to basically evaluate your plan, each section, and then rate it. And then you keep an ongoing score of helping you to, at any given time, say, what's the weakest section in my plan that I should be spending more time on? Just sort of helps you to prioritize your thoughts in making your trading plan better. But this week we're working on analytics. So in order to have analytics, you had to have record keeping, which is what we started last week in order to prepare. So, yeah, okay. It may just be acclimating yourself with the trading plan. There's videos with each section there that you can review to help pinpoint, start picking, and start working on making that plan stronger. All right, let's get into it. So here's our posture. And Stephen, as the updates are coming, Stephen has built this for me with wait a second. Where am I? That's the wrong thing. I just did the wrong thing. Ooh, there we go. Stephen has built me a spreadsheet that does this automatically. So I am going to put that in the trader resources section so that you can have that. Saves you a good 30 seconds. Add it up every week. It adds up. Okay. Where are we now? Something seems off to me here. Oh yeah, no. We had just dropped. We had just dropped from a 5.75 to a 5. So from last week, we saw something that we said, that's starting to be a little bit concerning for us, that 0.75 point drop. Now let's see where we are after last week. So we just had, from what I understand, at least on the NASDAQ, the last 2 weeks were the worst 2 weeks in the last 2 years. Someone flagged me if they saw that stat and I'm wrong on how I'm saying it. It was a bit nasty these last 2 weeks. If you notice, the trade alerts, the last couple we had were in oil, which did well, and in Colgate-Palmolive. What sector is that? Consumer defensive. And we even talked about them being off-cycle. What makes off-cycle trades appealing? We see off-cycle trades start looking appealing, not at all coincidentally, at the same time that we see the market's strength start diminishing. Yes? That's the connection that we're looking for. And so right now, what have we seen? We saw the leaders taking a break. Who led this last surge? Technology, chips particularly, software, communication services, Google, Netflix, Meta, all very strong, pulling everything. And in fact, if you remember a couple of months ago, I said, my concern is right now it's only these two. We had a very low sector score. If you go back, our sector score got negative. Right? Our sector score got negative in May. And even as it started to move, we were like, there's only a couple of sectors. But then, all of a sudden, we got more signs of strength. Okay, without that, we'd be in a lot of trouble right now. But we saw the strength moving into financials and then starting to move into industrials and also moving into some consumer. And we're like, hey, oh, okay. There's that breadth. If you ever wondered when people say that's a broad market, we lack breadth or narrow, or talking about how many different areas are money flowing into. Well, when we got what we needed, it allowed us to be in this situation now where we did have opportunity. There was still opportunities popping up last week, right? But where were they? In different sectors. If you've been coming and listening to Glenn, he's been talking about sector rotation. I hope that you're seeing real time what we're looking for and why we're looking for it. The institutions, they shift and it's like, oh, okay, they're turning. You see the Titanic turning and you're like, oh, okay, let's shoot in front of it. That's our advantage, to be a speedboat watching the Titanic. We're just waiting, and then when we see it go, we shoot forward. We're fast and quick and nimble. That's our advantage. So if you ever are trading and you're not being fast and quick and nimble, then you've sacrificed your advantage. Okay. Let's start at the top, work our way down. Long term, I have no expectation of this changing yet, but all of a sudden it's getting closer. What do I mean by that? Well, let's pop to a 3-year chart. This is the bottom line of the trend I'm scoring right now, right here, this blue line. Let me zoom in a click. All right. So we start at 3 years, but really what I'm doing is I'm trying to find the most current relevant trend, and I'm scoring that. So you can see this is a great representation. We've been in this for quite some time. This has been our score for quite some time. Now, one of the things we're talking about doing right now is correlating what's happening now to what happened where. Well, we talked about 2 other markets. We said, okay, it's April. April is one of them, right? Might have been late March, but basically we'll say early April. Right there's one. Then we have this back here. This is August, September, October. That was 3 months. So this back here is a correction, technically defined as a 10% decline from the high. Yeah? This was a consolidation. This was 5% down from its high. And there's our high. As of right now, we touched already 4.7. So, what does that mean? That means that if we believe this is a correction, a consolidation, that this next week we might have already hit it. 4.7 versus 5. Those are pretty close. It doesn't have to be exactly the same, right? We're not like, oh, it didn't behave at a 97% correlation. We're not dogmatic. What we're saying is, let's look at this and see, does it feel the same? It does, but, it feels a little early. Like, could we have one more week? Oh, yeah. Let's go back and look at the 10% market. What do we have? We have 3 distinct swings where we would drop. The first one, I believe, was a 4% drop, very similar to what we have now. And then it goes back up 2. Then we dropped 5%. Then we went back up 2. And then we dropped the last 5%. So you can see it's like, okay, 14 down, 2 up. That's how you got a total of 10 down. If you remember, in April, I was concerned right here. If you don't see the last one, I'm going to circle one candle. Right, that little candle. After that 5%, what was my concern? My concern is that if we're only up that 2% and things turned around, then I was moving into correction mode, right? And I would have been more aggressively to the downside. I would have been more defensive. But that's not what happened, right? That's not what happened. I think we're in a very similar situation right now, which means that we might get one more bounce down. I'm talking through this even though I already know what I'm going to score it. But anyways, I just wanted to talk through this because we're likely, if we see a bounce, are going to see this thing come up, right? Something like this comes up for a couple. Right there. Right there, if you look, the next wave, if this thing dips from that point, confirming this as a lower high, then all of a sudden I'm back to August, September, October last year thinking, uh-oh. Versus if it continues, then we have something a little bit more like what we have now. Okay. We can't know. We have to be ready for either. We have to think. So what does that mean? That means that if I'm trading as if this thing might bounce, there's actually 3 distinct possibilities for me. Number 1 is a V. We actually haven't talked about that because we haven't seen that here. But I still think there could be a V where we just shoot back up. Right? So this is what we're thinking here. And what you have to think to yourself is, what do you see as the highest probability? That's going to lead to what you're going to trade. Then think about what's the second highest probability, and that's going to lead you to think about what might you be defending against based on what you decided to do off the first option. Miguel says, I hate to interrupt and do not know if I use Fibonacci, but the next 2 pullbacks from the 10% hit the 160 and the 260. Are you saying that the 160 and the 260 is usually a Fibonacci extension? Are you talking about the extensions? So you're saying that like it hit from this high, it got to here. I I don't use Fibonacci's very much at all because all Fibonacci's do is help to see possibilities. And my analysis already has me looking to see um, possibilities, if that makes sense. So to me, when I look at a Fibonacci, it's like, well, it could be here, 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 or here. And when it moves up, there's a good chance it might get to here. Yeah, great. Those are great guides. They're guidelines. There's certainly not anything beyond guidelines. Some people they think Fibonacci, they're like, this is the magic number of science. If you count the petals of a rose, you'll find Fibonacci, and that somehow that means it's more valuable in trading. It's not. It's as valuable as any other single tool, which is any other indicator, right? You can find people who will swear by them, and then, I can go in and be like, well, what about this? Well, what about this? Well, what about this? What I say is have a toolbox, have a number of tools in that box. Fibonacci, add it as a tool in the box. Some people love Keltner channels. Put it as a tool in the box. It lends perspective. It helps you to generate targets for your trades. Hey, it might go here. Great. We need a starting point, and then we need to be flexible if it doesn't get there. So I'm not close to it, but I'm also not like worried if it says something different, right? Does that make sense? Add the perspective into the recipe, mix it up, bake it, see what it tastes like. I guess would be my advice. Okay, let's score it. My score doesn't change. The trend is unchanged. Until we break this line, and even if we break this line, people are like, oh, so if you break it goes to negative? No, it could come down to here and then turn up, and then all of a sudden we just need to redraw our lines. That's just a different angle now. That's a 1.25, not a 1.75. Does that make sense? So we don't want to rush to swing our scores widely one way or another. We're just looking to understand what's going on. What does it mean? Right now, there's nothing more concerning than this. Now, as you look back, there's nothing concerning about that. But when you were in it, there was some current. You felt some concern. That's what we want to point out. Okay, unchanged. Michael says he agrees. Is anyone changing their score? Put it out there. Let's have a talk if there's a reason to. But right now, a lot of what you're hearing is a narrative of what I'm seeing in the market. But what we're doing right now is very simple. We are identifying the trend, meaning we're trying to connect some dots, see if they form a trend for us. If they do, we're going to score the angle of that trend. That's it. That's all we're doing. If we can't get that clean trend, we have a clean trend here, but if we can't, then we look to find ways to identify. Remember that trend is about buyers and sellers, supply and demand. So anytime we struggle to find trend, then we will revert to support and resistance. And that's when if we break support, higher high. If we break resistance, higher high. Or if we break support, lower low, then I start saying, oh, let's give the buyers a quarter of a point for that. We'll give the sellers a quarter of a... Because sometimes it's hard and you can't find a clean trend. So you just have to remember that what we're doing with trend analysis is really trying to understand the general direction of the herd. Who has more control, buyers or sellers? That's it. That's the impact of what we're doing here. Okay, now let's go to the short-term trend. That's the problem. Houston, we have a problem. So last week, we left it unchanged. No, we didn't. Last week, we changed it by a quarter of a point. So that's where you can see from 1 week to the next, the trend, what happened on the trend. It was very interesting because we got to right here. And on that point, we broke the bottom. So what did I do? I knocked a quarter of a point off. And I said, oh, look, the next 2 days, we popped right back up. And we tried to hold this trend line right here. We tried so hard. And then the market's like, no, yanked the rug out from underneath. Bam, here we are. Then the rug got pulled. Okay, That's what we're scoring now. Here's the deal. We don't score. We don't look at the bottom and say, oh, look at the volume. We score volume by itself next. We can't let volume influence us. All we're scoring is what is the influence that this has, that this dropped like that. Okay. I'll tell you what I want to do for just a minute is I want to go back. I want to see how I scored it last time. And you can see right about here, we went a quarter of a point the first time, quarter of a point the second time, half a point the third time. That was April 7th to the 21st. That was back here. So we dropped it a little bit on the 7th. And then a little bit more, and then a little bit more. And then it stalled at a 1. Right? It stalled at a 1. And some people are like, well, wait a second. If I drew this, that's a down short trend. So I'm gonna and I tried to preach temperance and patience. That we don't want our score. We don't want our score to swing wildly in reaction like this. We want to make sure that we hold our composure. So that's why I say in times like this is where we score it by ticks. It loses a quarter, it loses a quarter, it loses a half. And we ended up not getting below a 1 right here. And I want you to notice how quickly this trend then turned back up. That is why I want to score it that way. So I want to make sure I'm doing the same thing here. But I actually feel like this got down a little faster. This was like a little slow, then it went. So I'm actually going to hit it with a half of a point today. We broke down, and so we broke the trend pretty convincingly, and we took out both of these lows, right? We're all the way back here. So I'm going to hit it with a half. Thoughts. So it's going to, now here's the thing. What does that mean my score is doing? It's going from a 1.5 to a 1. I'm going to that same place that I was. I'm going to a 1. Steven, what was yours? I didn't have a chance to look. Now, I would say at a minimum, it's a quarter of a point. Right? It's got to be at least a quarter of a point. I felt like a half was necessary. Does it need to be more? If someone said, Scott, I'm hitting it with three quarters of a point, I'd be like, okay, that's strong, but I get it. That's probably about as far as I think we would go, right? So there's a range here. There's not an answer. Everybody can have their answer. But what we're trying to do is find that where we're all in agreement, like, yeah, that's representative of what happened. Half of a point detraction is representative. So Miguel's saying he's dropping his by 3/4. Okay. All right. Love it. Great discussion. Let's go talk about volume, because that's another one that got... Now, I want you to notice that volume flagged us as one of our biggest concerns last week. Right? We went from a 0 to a minus 0.5. That was this was the number one precursor to what the market did last week. And of course, yeah, I didn't say at the time, here's what the volume did, and it's going to lead to this, because we don't have a crystal ball. Of course, in hindsight, I'm now saying, hey, look, but this is what I mean when I say what we're looking for in our analysis are real subtle things. If it's not subtle, if it's obvious, and everybody's already talking about it, it's not worth anything. That's not good analysis for us. We're trying to be in front of the market, right? So That's what we're trying to do, is see things that are just these little tremors before the quake. Volume. Let's talk about it. So volume, I'm taking down to a 1 month daily chart. That's it. Oh, first thing that stands out to me before we even analyze is the sanity check. Yeah? Do you see it? And how our score went to a minus 0.5 and our sanity check was like this. It was still slightly up, but we're like, we can live with the minus 0.5. Actually, that wasn't where it was. It was down here. Interesting, right? What do we have here? That's a red day, so I'm giving that an X. Then I have these 2 days here, and I have a X followed by a check. Yeah? And now I have an X, and then an X, and then an X. Didn't get any checks. And then I have an X, and then I have an X. Okay, now it's not even a sure thing, this last one. Average volume is 48 million. We need at least 105%. So we only need it to be, 50.2 or 3. We got 53. So that is a check. That is a check. And now we're seeing some new things. People who have been here for a while, we haven't seen something like this. Those of you who are new are like, whoa, yeah, this is nasty. So what do I have? I have 1, 2, 3, 4, 5, 6, 7 to 2. 7 to 2. This guy's stale, but even still, 6 to 2. And 6 to 2 is going to be with us for at least another week, right? At least another week, it's going to be 6 to 2. Yeah. Miguel says volume minus 0.75. I agree. It goes down one more click. And what's our sanity check say? Our slope is negative. That checks out. Minus 0.75, right? And now here's the thing. I feel like we did a pretty good job seeing this coming. We already gave it minus 0.75. For me, this is just, it got a little worse still. Sellers pulled a little harder still. Okay, let's give them their credit. We still have overall the positive trends in place. We have to make sure we recognize that. Here's what's interesting. Major market got to a perfect score. How did that happen? Was I just entranced by a perfect score? We're going to see. We're going to see right now. Questions before we move from the first half to the second half. I'm going to start to speed up so that I have time to go through the watch list. But the watch list is good. We don't need to search. What am I looking for here? Taking some pictures. Job open. Oh, I'm going to leave that one open. Job openings. This was an interesting chart to look at. If you missed this, right? Job openings, we're coming down, but even coming down, we're still above, which was a very strong place to be back here in 2019. So I don't see this as weakness. I see this as reversion to the mean, right? Getting back to a normal. Real quickly, we forgot to do this. Let's look at the economic calendar while we're here. Next week's economic calendar, nothing Monday. Tuesday, consumer confidence and job openings, 8 million, right? It's expected to tick down to 8 million. But remember, back here, they were only around 7.5. Never really higher than that. Whoops. I did not mean to leave that page. Then we have the Fed and ADP. ADP is expected to get better. What weakness? What weakness? They're still adding 170,000 jobs is what they're expecting. Then Thursday, jobless claims still expected in the normal range. Then Friday, non-farm expected to come in around 200,000. Now, unemployment is supposed to come in at 4.1, which is staying the same. But if for some reason, and just because we added jobs like we are, there is a possibility that it does go to 4.2. If it goes to 4.2, I'm going to say it right now. There's going to be a huge wave of everyone who thinks they're so smart putting out these predictions that now they think there's going to be a recession because we triggered the SOM index. But they probably won't even say it triggered the SOM index. They're going to say increased weakness in the employment market. And that's what they're going to use. Do not be tricked. Do not be led and persuaded by that attempt to raise fear levels. We can see, looking at the granular numbers, we're looking at the non-farm payrolls, we're looking at the ADP private payrolls, we're looking at the jobless claims from week to week. We will see weakness there. I promise you. Don't let someone convince you with some obscure. At first, I was like, oh, this is a really cool indicator. And then I looked into it. And that's where a lot of people stop. Look into it. And then you're like, okay. Not that big of a deal. But a lot of people are now anchored to it. And you're going to see the reaction, I promise you. Should be interesting. Okay. What else did we say we were looking for here? I forgot why I came here now. Okay. Major market. Oh, that's why I came here. To analyze. Here. Left your volume at minus 0.5. Oh, okay. Okay, Stephen. Fair enough. I like your rationale. Nothing wrong with that at all. Look at this. Quite the tumble for the NASDAQ. Not quite as bad for the S&P, but you can see that things got shook up a little bit in here. The Russell all of a sudden moved into a leading position while the NASDAQ dialed back. So there was definitely, we've been looking for that evidence of the battle for third, and I believe we have 100% found that the Russell has taken that third spot and maintained it. Even this last week with all the volatility, it maintained it. So this is where it's interesting that the market is holding on to this strength. Now we go to 133. What do we see? Exactly the same picture. So even when we saw the Dow, we're like, oh, there's a little bit of strength in the Dow, but it's not the same. The Russell has moved into the Russell's leading on both of these. Even in the pullback, the NASDAQ is still ahead of the Russell, but you'll notice that we have both the NASDAQ and the Russell ahead of the S&P. That's literally the definition of what we're looking for out of this analysis to be strong, is that the NASDAQ and the Russell are leading. That means that the appetite for risk is strong. People are looking to move their money into technology, look to move their money into small caps, because those are the things that can grow 30, 40%. You can't grow Dow components 30, 40% on a bullish year. So people are less interested. Look where the interest of the Dow is. Interest in the Dow we tend to look at as being defensive. Where's the interest in the Dow? Non-existent. Doesn't exist, right? Okay, now let's go to 66. What happened? More of the same. The surge in the Russell has maintained its strength. Even though the NASDAQ has dropped, it has still stayed in a leading position even after the drop. And the Dow is lagging. This looks fine. Everything looks fine. I'm not going to change my score. I'm going to leave it as a 1. 22 days. Bam. Look at the small caps. Rawr. They are so convinced that they are getting a rate cut. I mean, I hope they do. Right? I hope they do. I feel like the Fed puts themselves in crosshairs politically if they do. I think it would be easy for them not to. But if they do it, it's because they think that it makes sense. And certainly that is good for the economy, for businesses to get money cheaper, and good for the market. The market will like it. So, okay. Anybody want to change where they are aligned? I'm scared to declare myself September. I still feel like November makes more sense. Okay. Unchanged. That remains to be our strength. This is our beacon of light in our analysis right now. While the volume is showing turmoil and the short-term trend is showing deteriorating conditions, the major market is a torch of goodness and hope. Okay. And if you're wondering, are you saying I want to be bullish? 100%. I always want to be bullish. Bullish is better. Bullish is easier. Bullish is more stable. You guys know the saying. Everybody's a genius in a bull market. Sector rotation. Okay. Let's see what's going on here. New to the group. Scoring is new to me. Is there any reference to this? Oh, it's like Bob Roland is a plant. It's like he's a plant. Is there a reference to this? There absolutely is. I'm going to show you where everything is for just 1 second here, because I have to show you something else. This is the trading resources. So I'm in Discord, and over here on the left, you're going to see all our channels. Beginner's Corner. Go. If you're new, go in there. See what's up. Ask a question. Come in here. These are the two big ones that are from me. Trading resources, group downloads. So trading resources, here is the content library, huge resource. In the content library, you will find a video for each section of the trading plan. You will find a video for each component of the market analysis. Our YouTube channel, it's all the same videos. They're a little better organized here, but I would recommend going and liking and subscribing, because it helps just kind of get our channel out there, and it'll notify you when I load new videos. So you'll be the first on your block to know when new content is loaded. Everyone will be jealous of you. All your neighbors. Market posture. This is the link to the major market analysis chart. If you want that chart, click here and you have it. Sector rotation. Click here. It's yours. You do have to change the time frames at that bottom right-hand corner. Bullish search. Bam. Click here. You're running a search. You just have to click the sectors. You want our economic calendar, the Fed watch, the heat map, blah, blah, blah. Then you go to your downloads. You have your trading plan outline. Here's your blank market posture log. Here's a blank stock trading log and option log. Here's the top 10 trading mistakes. Here you can get the historical numbers, so you can add those to your log and then start from where everybody else is. And here is our current group watch list. So, there's a lot in there. Oh, also, in the, where did I put it? In the resources, the new 6-part series on placing your first stock trade. I've gotten some great feedback from those who have watched it, and I feel like it's a good resource. So each of the videos are about, 12 to 15 minutes. They go quick, I think. All of that is there for you. You can just come in here and start watching and going through. You get some great chart art from me. That's what I call it. Okay, let me go back. I hope that helps. Let me make sure I can see. Yes, Bob, your name was familiar. I'm like, why does that name sound familiar? It's great to see you again. Glad to have you. Welcome to the group. And for everyone else, I hope that helps demonstrate where the resources are. Okay. Yeah, look at us already down at a 4.25. I think we're going to maybe get to the 3s, because that VIX is going to drop. I feel it. Let's do the... I'm probably going to take 10 minutes of your time. I usually do. I apologize. You're welcome to drop, come back and watch the recording. I hope you can stay. Let's do sectors. Same basic thing is happening here. Technology and communication services, where are you? Green. We're at the top and they've started to drop off, but we already had financials coming into the picture. We had industrials coming into the picture. Utilities, we didn't love that they were coming into the picture, but there they are. So you can see that this chart's a little bit more of a mess. That's why the top score I had was a 0.5. And last week, Steven said he felt like I had an error in my analysis, and it looked like there was, and it maybe should have been even lower still. Let's go to 133. What's happening here at 133? Technology, you can see how far it's dropped in the mix, right? It's still near the top, and it could recover quickly. We know that. The same thing happened back here. Look back in March. Look back in March and April. It bottomed out in April, and then it made a huge comeback. So I want you to notice, if you can, right around, I'm gonna draw it so then you can see it. Right in this area, when I highlight the pink, I want you to notice what you see. You see those two arrows? That's our pattern. That's our pattern right there. So right now, the last thing I want is you to get scared. I want you to be ready for opportunity, because if technology pops up and then pulls back just a little bit, that little bit is where we're like, oh, this thing wants to go. Look back there in April. Popped up, pulled back a little bit, and then started, and then look what happened from there, from that second arrow until it topped out. We got about 2.5 months of just outright technology strength. So we have to be ready for that. That's what we're saying. Is this, if we're trading this to look like the consolidation we had in April, then that's what we have to be ready for. Now, we also have to be ready that if that fails, if this next bounce fails, then we're starting to push to last August, September, October, very similar time frame, where we think this might be more sustained, right? Where there's a second and even a third move to the downside. If that's what we think is happening, we're going to very much adjust our strategies. You're going to see that the alerts that come out are very different, but for now, we're still going to end up bullish. Let's keep going through this to see if this is going to drop. This is where we're scoring it. And you can see even now technology still on top. Discretionary is near the top. Healthcare, utilities. I mean, you can see there's financials. It's kind of a mixed bag. Do I believe this is cyclic? I think it is to some extent. I think it's a minor cycle, not a major cycle. So a minor cycle means I'm still looking for this to be. I mean, here's the deal. Let me finish answering that in just a second, Michael. Great question. Great question. I'm going to leave my score unchanged. I still have the NASDAQ on top, or I still have technology on top. Energy's at the bottom. Materials at the bottom. I don't see enough to have me change the score. Tell me if you think I'm wrong. I'm going to leave mine at a 0.5. I don't think this one changed. So the fact that we got increased strength recently from financials and from industrials levels this out for me. Sandy says same. Love it. Okay. Leaving that as is. Let's go see the damage of the VIX. So maybe I won't get to the 3s. Maybe I'll only get to 4. Let's see. So let's get into the VIX. What did we have happen last week? So last week we dropped from 1.25 to a 1. And that was triggered. So what have we done recently? We broke the consolidation. Higher high. Higher low. higher high. Last week we scored this. That lost us 0.25 right here. Last week that lost us minus 0.25. But then, right? Then we got, so let me draw this pink line. This pink line is the cutoff. It's actually right where the expiration line is. Okay? So what happened last week? First, we triggered here and we pushed. That gave us a higher low. I'm going to give it a dock for that, minus 0.25. And then it popped immediately to a higher high. I feel like that. Am I being too harsh? I mean, those two things happened, right? So I am going to drop mine by minus 0.5. Here's the deal. I'm still positive. The VIX is still positive for me. So I'm still overall, I was still overall bullish. Not was, am. I am still overall bullish. I'm going to drop this by 0.5 point to a 0.5. But 0.5 is still, it's still above neutral. It's a bullish end of neutral for this score, I would say. It's more of a neutral looking VIX now, right? And I would agree with that. It looks like we're at or near the highs of this chart here, but remember that when we go back a couple of years on this, 18 is a pretty reasonable place to be. So we're coming off of it. What would we be looking for? If we come down like this and we turn again, that is another higher low. Escalation. This is the fear indicator. We do not want escalating fear. That's why we're dropping our score right now, right? So right now we're concerned that something like this, that's what happened back in the last time we got one of these. Do we have one more shoe dropping right here? That's our concern, right? Now, if this starts to develop and this happens, that's magical. That's what happened right there. All of these are times when we're like, giddy up, right? So if this happens where it starts to come and then it rolls over, I'm going to look at that as being quite a bullish. So Miguel made a comment that this week is pivotal. Yes, it's pivotal. But if it's pivotal, if it's not pivotable, if it's pivotal in the beginning of a V, if you want to be a part of it, you have to trade now, right? Now. That's why we put a couple of alerts out on Friday. If you want to be a part of it, you've got to be thinking about it now and early. And then if we have a little hiccup, you've got to trade the hiccup. And then you've got to be ready to manage those if you think we're moving into correction mode, right? So yes, it's pivotal. And as it's pivotal, you have to have a plan for how you're going to trade it starting from the very, very beginning, which is where we're at. So yeah, we did put a couple of trade alerts out. They're still valid as long as you can still execute on them in the range on Monday. So if we open down a little bit on Monday, they're still valid. So pull them up. Where are those found? They're found in the Trade Alerts channel. I know, I'm clever with my naming. Took me a while to come up with that one. Where should I put the trade alerts? I don't know. And then it came to me. Cup and handles? Yeah. Okay. A cup and handle would be nasty on this. If you got a true, like it came all the way up and it cupped and handled, the handle is another higher low, right? The handle's another higher low. And if it breaks that, trouble. Big trouble. Greg, good call out on that. That would be pretty nasty. Let's quickly run through the watch list and I'll get you out of here just a few minutes late. So what does that leave us at? Market posture score, 3.75. Ooh, I had a pretty good prediction. So 375, we're still bullish. It's still bullish score. So this is where we would say, oh, this is what a correction feels like. If it turns into excuse me, I keep doing that. I'm sorry. A consolidation feels like. If it was a correction, when it got to a correction, our score got down to a 0 or a minus 0.5. A bear market's when we're down another 10% from that. So our score will be negative, and we will be also, we're trading not when our score is negative, but as our score declines. So if we get one more week from here, we're going to say, you know what? We're going to start opening the door to some bearish trades. There's enough weakness in the market that we think it now creates opportunity because traders can trade both sides. Okay. Watch list. Apple. Whoops, let me get this out of the way. I still actually like Apple. I want Apple to hold its ground and do well on earnings because Apple is a market leader, but I'm not willing to trade it with earnings that close. AMD, no. Anything that looks like this is now in that consolidation pattern. That consolidation pattern requires a 3-step process. 1, 2, 3. Break, higher high, higher low. Without that, I have zero inclination towards trading in this. Amazon, same. AXP, that's viable. The stochastics hasn't turned, but the candle has. I'm definitely looking for trades in financials this week. That's set up. That looks fantastic. Industrials, definitely could have taken that one. We put a trade on in Fastenal, which is an industrials trade. You'll see where that one comes in. But could you take another one? Could you look at something else in industrials? Yeah, look at BLDR. Citi, could have took it. I thought about it, didn't put the alert out because I didn't want to overwhelm with alerts. But that definitely is looking strong. So I would say right now, where are our opportunities? Financials, industrials. Caterpillar, yes. CCL, holding support, maybe. There's Colgate again. Still in consolidation. That's why we wait for consolidations to break. Because you never know how long the consolidation is going to last. I can't wait to trade this when it breaks out of this consolidation and does this. Because I think that's when the next one of these is going to start. If you go back to the beginning, you're going to find this pattern sitting back here at the start of that trend. Promise. Pinky promise. Pinky promise. COP. Yes, right? I still think oil has a setup. I still think that there's an off-cycle traded energy right now. I don't want oil to go higher, but it looks like it's poised for a pop. Costco. Costco's now been labeled persona non grata. It is excommunicado. We cannot do business with it until it has made amends. It looks like this. Okay. But I'm not going to stop watching Costco. I love trading Costco. I want to trade more Costco, but not until it's ready to be traded again. CSX, viable. Absolutely viable. That was viable and still is as long as you can catch it in this range. Where's CSX? Industrials. Carvana, retail. Not a lot of time before earnings, but I think you could, if you wanted to take a 3 or 4 day trade, you could have took a ride. Ford got beat up on earnings. That's why we don't hold through earnings. I'm actually going to bounce Ford from the list for now. No need to keep watching that. It's got a long road to recovery ahead. We'll see if it can what happens. FCX. I'm also going to bounce FCX. I don't like that as a material stock. Doesn't look great. I'm going to keep watching Bitcoin, but there's nothing great there. Gold still looks strong. If you were thinking about a gold trade, I could see what you're looking at. I'm not a big fan, though. Gold can be choppy. General Motors. I would still trade General Motors because it could still bust the consolidation, but it's in a better shape than Ford is coming out. Consolidation, got to wait. Opportunity right in front of us. Where is that located? Consumer discretionary. Small caps holding up, as are home builders because they're tied to the same thing, interest rates. Coca-Cola. I don't know where that came from. We traded Coke back. Was it this one or one of these back here when it was a little defensive? Meta. not going to be tricked. And there was nothing in this that was attractive. There's nothing in this until it breaks the consolidation. You don't have to worry about it. Just relax. Let it do its thing. Watch. There's better financials than MFC. So I'm not worried about that. MMM. Woo! What a breakout. And this is why sometimes we regret not trading through earnings, where you're like, oh, wouldn't that be fantastic? Morgan looked great, but just couldn't hold on at the end of the day, but still looks viable. Microsoft consolidating. You can see the pattern in all the technology stocks, right? Everything is showing up and confirming what we saw in our sector rotation. It's great confirmation. We have a good read. We're not, I think we could see this happen anytime. If this is going to be a consolidation, we're going to see these things start to break, and I want to trade them when they do. NVIDIA, all of them. They're all showing very similar things, but they're not showing trades now. That one is, but as I said, if I'm looking to buy a house and I drive to a neighborhood and the neighborhood is on fire and the one house isn't, and it's a good deal, I'm not going to be like, yeah. I'm going to think, I don't know, that house is probably going to catch on fire too, right? Don't buy the best house in the worst neighborhood, or at least in a deteriorating neighborhood, until we know the fires are out. If we know the fires are out, that's a great time to get the stock that didn't ever go on fire. Qs, no. SPY, also kind of no. They're both in that consolidation. Retail still holds up, looks okay. One more thing we need to look at, that's also in consolidation mode. The dollar staying down, okay. Staying down, okay. Real quickly before we go, I'll give you your first introduction to the trading plan. This is what you're downloading when you come in there, this trading plan. So these are the sections. Right now we're on analytics, section 7. We just talked about record keeping, which means you're actually going in and building in your watch in your spreadsheet. After section 7 analytics, we move on to 8 improvement strategy. That's where we set goals, and then we'll start over again. So in a week or two, we'll start the cycle over. For now, that's what we're working on. The trade log looks like this. So this is a stock log. You enter your trades here, and you get this dashboard here with all your analytics automated. Okay. Whew. A little bit of extra time. I appreciate it. Sandy's a 4. Thank you, Phil. Good to see you. Steven's a 375. I think we're all in a pretty good place. I think we see it right. I think we're ready to move forward in the week, which means tomorrow morning, 15 minutes before market opens, we'll meet. We'll look at what the futures are doing, and we'll be ready to manage the trades we're in and think about the trades that we want to put on. Awesome. Yeah, great session. Good to see everybody. Have a great rest of your Sunday. See you in the morning. Happy trading.